We are live. What is up? Happy Friday. Happy Cinco de Mayo, everybody. Spencer Isbell here with Ian Culley, head of FICC. That's fixed income, currencies, and commodities at All Star Charts. Mr. Culley, how is your Cinco de Mayo going so far?
Oh, beautiful. Beautiful. Having an excellent Friday morning here on the Gulf Coast. How are you doing?
Doing pretty well, doing pretty well. I want to get to these commodities markets, specifically gold. It's going to be kind of one of the themes of today's show is gold. It may not be up today, Ian, but it is otherwise on fuego. Let's bring up your charts here. Let's rip through a quick recap of what's going on in FICC land.
Yeah, so before we get to gold, I just
Sure.
want to step back and take a look at the commodities in general. It is a triple pane chart of the Bloomberg Commodity Index, the CRB Index, and our equal weight, our custom index equal weights 33 individual commodity contracts. And the point I want to make here is that when I look through all my commodity charts, I'm seeing a lot more topping patterns than I am basing formations. So that's just important to understand. As you see these the support levels here at the indexes, they're price or the indexes continue to pound these former support levels. And the way I learned it, the more times the level is tested, the higher the likelihood it is to break. So breakdown alert for commodities, but there is a bright spot.
Oh, yeah.
There is a bright spot within the commodity space. And now we're talking about gold here. Gold retesting, flirting with new all-time highs yesterday.
Oh,
It was
man.
about $4 shy. So I mean, the gold bugs are ready. Gold looks ready. It's been consolidating. It's been building up energy for over 2 years now. Are we going to see some new all-time highs here in gold in the coming weeks? I think so, but you got to let the markets confirm with an upside resolution above 2,000.
I like this chart because the third time's a charm, right?
Well, yeah, third time's a charge. I mean, yeah. Again, like it's been knocking on the door, and
yeah,
it's I look at the gold chart, and gold has been very, very polite. And here we go. Here's a little zoomed in chart here. Momentum remaining in a bullish regime. Bulls are in control. It's just a matter of when demand can absorb all of that overhead supply around that 2089 level. Now the level in GLD, the gold shares ETF, I'm focused on those prior cycle highs. The last commodity super cycle high from back in 2011 for gold futures is 1924. For GLD, the ETF, it's around 185.50. GLD is well above 188.550 at 190. I like it long as it's above 185 with an upside objective around 240. And then GDX, and this is really interesting. I was talking to Greg Gunther earlier this morning. After the non-farm payroll report came out, it really hit gold and silver. It really hit the markets. Markets reacted. Gold pulled back from those, upper 2,000 levels. Silver dropped below 26. What was interesting, he was pointing out that the miners really weren't buying it. Mining stocks remain resilient. They didn't really react or sell off to the same degree that we were noticing earlier this morning in the futures markets. And now as I check my screen, both gold and silver are bouncing back. Gold back around 2020, and that is the June contract, and July silver back around 25.75. So maybe it's just a little knee jerk reaction to some economic data.
Can't go up every day. What about oil here?
This is interesting. So to get back at these topping formations that I was mentioning earlier, and just the overall kind of, I guess, bearish tilt or bearish tone that's kind of capturing the commodities market. Really impressive to see crude oil. Really just impressive to see the bulls come and step in and drive prices higher yesterday, this key 65 level. It speaks to a lot of strength, a lot of demand down here. So this could be a kick saving to beauty. I mean, I was taught to trade in the opposite directions from wicks like this, right? And it just so happens crude oil is up almost $3 today, roughly 4.5%. So we could be, crude could challenge the upper bounds of this multi-month range around $83 here in the coming weeks. Here's that 65 level. So the 65 level down here, when we zoom out, it's an important level. We mentioned this on Wednesday. Key polarity zone, former resistance from 2019 and 2020 became support in 2021 and continues to act as support today. So something to keep in mind. Looking at USO, looking at the ETF, we're checking in on that $58 level. That coincides with the October pivot high from 2021. So keeping an eye on 58, USO below 58, risks are to the downside. Crude oil is probably trading below 65 in that environment. And energy stocks in general are probably coming under increased selling pressure. There's something to keep in mind. Here's a zoomed out picture here on crude oil. And it's still below the 76 level, right? And I want to share this chart because when you zoom out, from a structural perspective, energy is still on the ropes. There's no question about that. But when I look at the past couple of days of price action, I got to give crude oil the benefit of the doubt. I got to give energy stocks the benefit of the doubt. I don't want to rush to make any rash decisions. I want to let the markets prove to me that the bears are in control. We're zooming out here, XLE. XLE still hanging in there. Energy stocks are still hanging in there. Now, if crude continues to break down, got to imagine that energy stocks are going to catch lower. Right? Maybe they meet somewhere in the middle and it's just messy for the next 6 to 12 months. That's a real possibility. Again, we'll wait and see what happens here in the coming weeks. Copper. I want to get to copper today. We'll talk more about copper later. Copper in the middle of this range, this multi-year range between, let's say, about 480, 488, and 330, which coincides with those prior cycle highs from 2018. And we keep talking about those prior cycle highs, whether it's crude, copper, or we're talking about stocks, indexes. Those prior cycle highs when risk assets peaked back in 2018, it's a critical level no matter where you look across the markets. So as long as copper's above that level, again, I got to give commodities, I got to give base metals the benefit of the doubt. But right now it's just messy, stuck in the middle of the range. And what's interesting, look at copper miners, kind of on the same lines of looking at the resilience in XLE and energy stocks. Copper miners look much better than copper futures.
So, wait, question for you: when you see a chart like this, and to me they both kind of look the same, when it's in the middle of a range, is that just hands off for you automatically, or what?
If I don't already have a position, yes, absolutely. Like I'm not interested in taking a position in the middle of a range. I want to wait and see it resolve.
Got it.
In one direction or the other. From an informational standpoint, right now, again, it's messy, it's sideways. It's copper's like much of the market right now. So waiting to see an upside resolution for copper miners, COPX above 48. I mean, that would be huge. That would be a huge development for not only copper, but also just for cyclical assets. Even gold miners. And I'll get to that later. I don't think, when we have a conversation about gold, 3,000 or gold 5,000, copper $6, $7. It's the same conversation. So I don't think we're getting one without the other.
All right, let's move away from the metals and what do we have? So let's quickly recap what's going on in bond land and the currencies, and then we'll get to the good stuff.
It's messy. It's messy. but the 5-year yield is starting to resolve lower. That's a huge tell. So keeping an eye on whether or not the 10-year and the 30-year will follow. One bet I don't want to make is that these charts resolve in opposite directions. So if the 5-year continues to roll over, I think it's just a matter of when, not if, the 10 and 30-year do the same. So keeping an eye on yields. For now, it's still messy. There's still a lot of indecision out there. And looking into TLT, the level in TLT is, let's call it 110. If and when TLT breaks above 110, I like it long towards 120. Again, bigger picture, I mentioned this the other day. It's just the fact that we're adding bonds back to the portfolio. I think says a lot about the market environment. It says a lot about bonds and the repair that's been underway for almost a year now. What's interesting is growth versus value is posting new highs. Growth posting new highs relative to value stocks. We really haven't seen those new highs in TLT. So this key intermarket ratio is suggesting lower rates, and it's suggesting higher bond prices in the near future. So waiting to see if TLT follows. Hey, maybe TLT has it right. Growth stocks begin to break down relative to more cyclical assets.
But what you're saying is one of these charts has to change their direction.
Yes, like well, I mean, yeah, one of these charts needs to follow the other. Yeah, absolutely. Yeah. TLT either needs to start to catch higher, or growth starts to underperform value. Absolutely. Checking out bonds. Now the shorter end, we mentioned that the 5-year yield is starting to roll over. We're getting a little bit of decisive action in the 5-year yield. So it's not surprising to see IEI, the 3 to 7 year maturity bonds, break out. As long as IEI is above 118, I like it long towards 125. Remember, 30-year yield hasn't rolled over yet, and it's not surprising that TLT hasn't broken out of its base. So keeping that in mind, that breakouts are happening at the shorter end of the curve. On to the dollar. Dollar continues to hang above this 101 level. I mean, there's really not much to say. We're just keeping an eye on that 101 level. If and when it does break, again, I'm looking down at the lower part of this chart. I'm checking on the 14-day RSI. I want to see momentum print an oversold reading below 30. That's something we've yet to see. We've yet to see. So the dollar's still in a bullish regime, extremely impressive. Looking at the ETF, it's UUP. This is US Dollar Index Fund. The level there is around 27 and a quarter. Around 27. Again, did not hit oversold. So watching for a break below there. It's interesting. Maybe this discussion for another day. I don't know if a lower dollar necessarily speaks more to rates rolling over in an environment where rates are falling, or more of a risk on environment. It's something to discuss in the future. We're still trying to work that out. But moving on.
Yeah, moving on.
What's next?
Mr. Culley, I want to know what some of your favorite charts are. Actually, I want you to tell me, I hope you have for me, any juicy gold stocks, because you could play the GDX or the GLD, the ETFs, but we both know the juice is in the individual stock. So tell me, are there any good gold charts out there, gold stock charts that strike your fancy?
Oh, you know it.
Yeah.
You know it. And that's it's funny. I had lunch with a buddy of mine a couple weeks ago. We're sitting down, and I hadn't seen him in years. And start talking about what I'm doing now professionally, and he immediately wanted some advice. He wanted to know what the hot stocks were. Yeah. And I sitting there thinking, and I couldn't think of any other space, whether we're talking about commodities or stocks, that I like better than gold and precious metals. And two of the stocks that I really like, two of the miners, are IM Gold. And I know it's a smaller company.
Do I want to know how large? Here, I'm gonna look it up. How large is this company market cap wise?
It's approaching $1 billion.
Okay.
It's
All right.
approaching a
So,
billion.
all
It's
right.
approaching a billion.
All
But
right. All
hear
right.
me out. Look at this failed breakdown below a buck 15, and it has absolutely ripped higher. You know, the old saying, now it adds from failed moves come fast moves in the opposite direction. I'm quoting Brian Shannon there. And look, that's exactly what we witnessed. Now, price pulled back recently, retested the pivot highs from earlier or from late last year, and it acted as support. So as long as IAM gold is above 280, I like it long. And we're talking about, if we enter a secular bull market, as the charts suggest, if that this bull run really takes off, IAG is most likely revisiting those former 2011 highs up around $23. I mean, that's a monster move, and that's the type of juice you're talking about. So I really like IAG. Keep it on your radar as long as it's above
Is
280.
this a stock that you own or no?
I do not own this one, but
Okay.
I want to move into this one for sure. I have a bunch of gold miners right now. Now I
Okay.
definitely this is one that I own here. The next chart, which is Goldfields.
Oh, okay. Tell us about
Yeah,
it.
look at this big base breakout. It came down. It found support last year at a key retracement level. Broken the bulls drove prices higher above 16 bucks. As long as it's above $16, I like it long with an initial target of 24.50, secondary objective up near 61. Right, you can see a big move here. And what I love so much about Goldfields is look at the bottom pan. Look at it relative to GDX. Right? Printing new highs
Wow.
relative to the gold miners index. Like you mentioned earlier, before we got to this section about the juice, like the juice is in the individual names, and absolutely, and this shows why. Like if you want average returns, for JC say this many times, you want average returns, trade the indexes, trade the averages, right? Goldfields,
Yeah.
strong uptrends. They not only trend on an absolute basis, but they also outperform the alternatives. And that's exactly what Goldfields is doing right now. So I really like GFI.
All right. Are there other charts you like maybe outside gold right now? Or is
Yeah,
it just
I
gold?
think throw in a currency chart. I haven't really talked about currencies much lately. I think a little hungover from last year's trending markets. I mean, the trends across the currency markets last year were absolutely amazing. And now you can see just at this chart here, it's been sideways for the past 6+ months. I think the pound is a great example of the base building process that many global currencies have been undergoing as the dollar weakens, and they're starting to resolve higher. And the pound slowly, it's kind of interesting how it's kind of just slowly breaking out of this base and meandering higher. I like that. I like that. As long as the pound futures are above 24, I like it long towards 130, 150, which marks the December 21 lows. Now looking at another chart here, looking at the FX market and looking at the dollar pair, the pound US dollar. What's interesting about this, yes, the levels are slightly different. What's interesting is that it never hit overbought conditions as it broke out. So that kind of speaks to how it's just been a nice steady breakout. It hasn't been explosive. However, I can argue that momentum is no longer in a bearish regime. You notice when it would pull back in March, momentum held above 35. So it's kind of been this I don't know, no man's land. It's not really in a bullish regime, and it's certainly not in a bearish regime. And the pound bulls, the British pound bulls, should be like the name of a sports team, are slowly pushing the pound higher. So just something to keep an eye on, especially when we're considering potential dollar weakness.
All right. Every show we like to highlight some charts that maybe aren't signaling buy right now, but they're flying a little under the radar. On Wednesday, we talked about uranium. Do we have any sleepers for today, Mr. Culley?
Yes, I got a sleeping giant.
Oh boy.
Sleeping giant. Look at this massive decade-long potential inverted head and shoulders here in the Swiss franc. Again, this is a potential base. We need to resolve higher to confirm. Monster. If this thing resolves above 114.50, I like it long. Initial target around 122.50. Secondary objective all the way up towards all-time highs around 141. You know, in the way I learned it from JC, the bigger the base, the higher in space. He picked that up from Luis Yamada, which I had the pleasure of meeting last week. Absolutely amazing. Nicest lady. So as long as the Swiss franc is above 112, I think you can trade against that 112 level. If you want to wait for a decisive upside resolution above 113.60, 113.75. That would be a completion of this near-term coil, potential bull flag, and then the initial objective would be up around 120. That's how I like trading the Swiss franc. I think it could be a big move. It could be a really big move, and I think an upside resolution from this tight short duration continuation pattern, potential continuation pattern, could launch the completion of this much larger base. Something to keep an eye on.
All right. We got a few minutes left here. Let's talk a little bit more about gold, Ian, just because it is, the hottest market. I mean, again, not up today, but it is the hottest market otherwise in your world. So we'll do a bit of a deeper dive, do a bit of a breakdown here. What are you seeing like under the hood in the gold market?
I see a lot of strength. I see miners holding their breakouts. But again, like gold needs to print new all-time highs. Gold futures need to just complete the multi-year base, or even when we zoom out, this decade-long base going all the way back to 2011. Now, it's already done that in practically every other currency around the world, except in US dollars. Nevertheless, we need to see gold resolve higher. We need to see gold above 2,100. Now, I want to take a step back, or not even a step back, but kind of redirect the focus here for a few minutes away from precious metals to base metals. So remember at the top of the show, I mentioned all the topping patterns I'm seeing across the commodity space. We've talked about crude oil and the weakness across energy. I want to talk about copper, the other major pro-cyclical commodity contract. I'm going to Dr. Copper. I call it Dr. Copper because we think, it just has a great read on the economic health and market health. A great way to look at that is copper futures overlaid with the global Dow. Now, the global Dow is an index of the top 100 international blue chip stocks. And when you overlay the two charts, they practically move tick for tick with each other. Now, I don't want to make the bet that these two charts, these two lines resolve in opposite directions. So if copper continues to break down, copper rolls over, we see some weakness in Dr. Copper, that does not speak well for the overall global economy and international stocks. Again, we haven't seen that yet, but that's what I want to keep my eye on.
What about
this is another reason, Smith. This is another reason. We're talking about energy rolling over, the breakdown in energy, overlay chart with our energy index, X ethanol, and the equal weight base metals index. You can see all of the components here highlighted. We got copper, aluminum, steel, nickel, tin, zinc, lead, iron ore making up that equal weight base metal index. Now, bull markets, rotation. Rotation is the lifeblood of any bull market, whether we're talking about stocks or talking about commodities. Energy and base metals, if energy continues to break down and base metals join and roll over, then these topping formations are resolving lower. Commodities as a whole are breaking down. You know, those few areas of strength are dwindling. Right. So when we look at copper futures, mentioned earlier, it was really messy, you know, it's in the middle of its range. FCX, same story. But I really like looking at FCX. It's a bellwether. Freeport-McMoRan, one of the largest copper miners in the world. And what's funny is when you overlay the two charts and run a 63-day correlation study, it doesn't get any stronger. I mean, it's as positive as you know, it's not technically as positive as it gets, but it's pretty darn, it's strong. It's strong. So FCX, the level I like, it's really clean, is around 35. FCX below 35. I think the global Dow, I think just global risk assets, I think commodities are most likely experiencing some level of increased selling pressure. But bigger picture, Spencer, to bring it all the way back around to gold, you know, gold 3,000, gold 5,000, it's the same conversation as copper around $7, $8.
Got
right?
it. So as one goes, the other should go. If you're bullish gold, in theory, you should be also bullish copper.
Eventually.
Yep.
I can see gold breaking out here and copper continue to chop sideways. I don't expect copper to completely fall off a cliff as gold rips to 3,000. But something to keep in mind.
But it's very possible that copper follows.
Yes, absolutely. I think bigger picture, longer term, copper follows. If we're in a commodity super cycle, again, I think that's what it's going to take for gold to reach those levels. If we're in another uptrend like we experienced in the 2000s, they're going together. Yeah. They're going together.
And FCX, as you said, is the largest copper miner. So if you're looking for copper stocks, there you go. What about silver? Is that part of the equation here?
Yes. We want to see silver participate, just like we want to see palladium. We want to see platinum participate. We want to see copper participate. But silver is the crazy cousin. Again, we talked about silver earlier in the week. Silver above 26.15 speaks to risk-seeking behavior. But as we zoom in, you know, as long as silver is holding above that 24.75 level, I gotta give the bulls the benefit of the doubt. Now, silver printed first 52-week highs yesterday, pulling back, but it's recovering. It's almost near. It's around 25.87. July contracts at 25.87 as we're recording. So bulls stepping in, supporting higher prices. I got to give silver futures the benefit of the doubt.
All right. We've come to the end of our show just about. As far as upcoming events, you guys know, if you follow the fixed income or currency commodity markets, that economic data can and will move these markets. So looking ahead to next week, we have CPI Wednesday morning at 8:30 Eastern, PPI Thursday morning 8:30 Eastern. So inflation Wednesday and producer price index. Really both sides of the inflation coin. The consumer and the producer Wednesday and Thursday of next week. That's it as far as the macroeconomic data front. Final trade, Ian, any final words of wisdom for us as we head into the weekend?
Focus on the miners. Focus on the precious metal space, and keep that your eyes on that lower level in crude oil around 65.
All right. If you want more of Ian's charts, you should sign up for All-Star Charts Premium, which you can do in the description on YouTube. I just dropped the link in the chat to a free report all about gold that Ian put together like a month or two ago now, Ian, something like that.
Yeah, with the help of the team, whole
Right,
all-star
right,
charts team.
right.
Yeah.
This is a free report. It's like it's basically, it's like, I don't even know how many gold stocks are in there, but a lot. You guys cover the charts. It's the ones you liked, ones you didn't like. I put the link in there in the description, or in the chat and description on YouTube, so check it out. It should also be on the screen. And that's a wrap. So smash the like button. Ian Culley, head of FICC at All Star Charts. I'm Spencer Israel. Everyone have a great rest of your day. Have a great weekend, and we'll be back with you next week.
Have a great weekend, everybody.